You get paid on Friday. By Monday, the money already feels spoken for. Rent is coming up, a few subscriptions hit overnight. Gas isn't getting any cheaper. Groceries somehow cost more than you expected again. Then you open your banking app and see something familiar. A credit card balance that's still there. Maybe it's smaller than last month. Maybe it's bigger. Either way, it never seems to completely disappear. And that's the strange part. You don't remember making one giant mistake. You weren't buying yachts. You weren't booking first class flights. Most of the purchases felt normal. Dinner with friends, a few things from Amazon, a car repair you didn't expect, a medical bill you couldn't avoid. So why does credit card debt feel so hard to escape? Part of the answer has less to do with spending money than most people think. Because for many people, the debt isn't the problem anymore. It's become part of the system they live inside. If you've ever felt like you're making payments but somehow standing still, you're definitely not alone. What's interesting is that credit card debt rarely arrives all at once. Most people don't wake up one morning and decide to borrow thousands of dollars. It usually starts with something much smaller. Maybe your paycheck doesn't stretch quite far enough one month. Maybe your car decides it has expensive opinions. Maybe a surprise bill shows up right after another surprise bill. The credit card steps in and solves the immediate problem. And honestly, that's what it's designed to do. In that moment, it feels incredibly useful. Future you can deal with it later. Future you, unfortunately, ends up getting a lot of assignments. At first, carrying a balance doesn't feel dangerous. The minimum payment looks manageable. You make the payment. Life moves on. The balance stays. Next month, something else happens. Another expense. Another swipe. Another small decision that doesn't feel life-changing. And that's the key. Most credit card debt isn't built from dramatic moments. It's built from ordinary ones. Tiny choices, small emergencies, normal life. That's the surface explanation. People spend money they don't currently have. But that only explains part of the story. Because millions of people understand that debt costs money. They know interest exists. They know carrying a balance isn't ideal. Yet, the balances remain. So what's happening underneath? One reason is that credit cards quietly change how time feels. Cash makes spending feel immediate. A credit card creates distance. You buy something today, the actual financial consequence arrives later. Sometimes much later. That gap sounds small, but it changes behavior. Human beings are surprisingly good at prioritizing today's problems. Future problems tend to look smaller from far away. Then the future arrives, and suddenly today's convenience becomes next month's obligation. What's even more interesting is that payments can create the illusion of progress. Imagine carrying a balance for months. You make a payment, the number drops. That feels good. Then interest appears. A few new purchases show up. And somehow the balance looks familiar again. It's a little like running on a treadmill. You're moving, you're working, you're sweating, but you're not actually getting closer to another destination. This helps explain why credit card debt often feels emotionally exhausting. Not because people aren't trying, because effort and results don't always seem connected. And when that happens long enough, people start treating the balance as permanent, like a monthly utility bill, something that's simply part of adulthood. But there's another layer that makes this even more interesting. Credit card companies don't necessarily need you to fail. They don't need financial disaster. In many cases, they just need stability. A customer who keeps making payments. A customer who keeps using the card. A customer who remains inside the system. That's a very different picture from what many people imagine. People often think the business depends on reckless spending. Sometimes it does. But a lot of the time, the system works perfectly with ordinary people living ordinary lives. The card pays for groceries. The card pays for gas. The card covers a few unexpected expenses. The balance survives. The payments continue. life goes on. And that's where the story gets bigger than individual spending habits. Because modern life creates situations where borrowing feels normal. Think about how many expenses arrive before income. You need transportation before work pays you. You need food before payday. You need housing before the next paycheck clears. Life often asks for money before money arrives. Credit cards act like a bridge across that gap. The problem is that bridges are supposed to help you cross. Sometimes people end up living on them. For many Americans, financial pressure isn't coming from one giant expense. It's coming from dozens of medium-sized expenses arriving at the same time. Rent increases, insurance increases, healthcare costs, streaming subscriptions, phone bills, internet bills. Everything seems small when viewed individually. Together, they can quietly consume an entire paycheck. That's why conversations about debt sometimes miss the bigger picture. The issue isn't always overspending. Sometimes it's that modern life has become incredibly efficient at collecting money from you. Every month feels like standing in the middle of a room where 10 different hands are reaching into your wallet. Some politely, some aggressively, all on schedule. And credit cards become the shock absorber. They absorb the gap between what life costs and what arrives in your bank account. The strange thing is that the more useful the card becomes, the harder it can be to leave behind. Because now it isn't funding luxuries, it's supporting routines. And routines are much harder to remove. This leads to a question that sounds simple. If that feels frustrating, why don't people just stop using credit cards entirely? Part of the answer is convenience. Part of the answer is emergencies. But another piece of the puzzle is that modern financial life is built around flexibility. People want options. They want protection from surprises. They want a backup plan. Credit cards provide all three. The same feature that creates security can also create dependency. That's the contradiction. The tool solving today's uncertainty can create tomorrow's obligation. And neither side is entirely wrong. Maybe the biggest perspective shift is realizing that credit card debt often isn't a story about irresponsibility. It's a story about timing. Money arriving at one moment, expenses arriving at another, and a financial tool sitting in the middle, connecting the two. When people imagine debt, they often picture bad decisions. But many balances are built from completely ordinary days. Days that looked responsible. Days that felt necessary. Days that seemed harmless at the time. Which is why credit card debt can feel impossible to escape. Not because people don't understand that, not because they're unaware of interest, but because the system works quietly. One purchase at a time, 1 month at a time, one payment at a time, until the balance stops feeling like a temporary problem and starts feeling like part of the landscape. And once you see it that way, the credit card looks a little different. Not as a trap that suddenly snaps shut, more like a moving walkway at the airport. You step onto it because it makes life easier. Then after a while, you realize it's been carrying you somewhere all along.